Hello everyone, and welcome back to another episode of Simply Wall Street's Market Insights. My name's Michael, and this week we'll be discussing finding value in the semiconductor supply chain. Over the last few weeks, we covered the three types of semiconductor chips, namely memory, logic, and analog chips. This week, we're taking a look at the companies that play a role in manufacturing chips, not the potato kind, but these computer ones that are harder to chew on. Some say manufacturing these integrated circuits is the most complex process on Earth, but clearly those people don't have kids. There are literally hundreds of companies that play a role in this process, and these companies may not produce the eye-watering returns that the chip makers themselves occasionally do, but there are more companies in this space and they can make compelling long-term investments. So with that being said, let's dive in. But before we do, here's our quote of the week. China's import of chips, 260 billion in 2017, the year of Xi's Davos debut, was far larger than Saudi Arabia's export of oil or Germany's export of cars. China spends more money buying chips each year than the entire global trade in aircraft. No product is more central to international trade than semiconductors. And that is an excerpt from Chip War, The Fight for the World's Most Critical Technology by Chris Miller. Now, let's dive into what happened in markets this past week. Here's a quick summary of what's been going on. Firstly, from Business Insider, CrowdStrike's terms and conditions entitle most to refunds rather than damages compensation. What's our take? CrowdStrike is in crisis management mode, trying its best to restore both customer and investor confidence. Most customers with standard contracts will be entitled to refunds of their subscriptions, while larger customers with custom contracts might be entitled to more compensation. CrowdStrike will likely be dealing with the fallout of this event for quite some time in the form of scrutiny from the SEC, shareholders, and customers. However, it's hard to say just how much this has impacted the business's future prospects. On the bullish side, it's the industry leader, its product is valuable, and enterprises are adverse to change given the high switching costs for software like this. So it may just be a short-term challenge. On the bearish side, it's potentially lost brand value, new customers may be reluctant to join, and custom contracts may demand lower prices given the stain on their reputation, so this could reduce future revenue growth. The dust is yet to settle, but check out these three different narratives on CrowdStrike on the Stocks Company report. Next up from Sherwood, rising expectations of rate cuts and a Trump victory boost smaller US stocks. What's our take? Investors like small caps again, well, for now at least. This was driven by the high likelihood of a rate cut in September, a softer than expected June inflation report, and the increased chance of a Republican victory at the election after the assassination attempt of Donald Trump. Smaller cap companies typically have floating rate debt, so rate cuts help them. They're also more domestic and less global, so trade wars and tariffs impact them less. Also, they typically pay higher taxes than their global peers, so Donald Trump's proposed tax cuts would also help them greatly. While these are all macro factors, they should not be relied upon for simply allocating some money to small caps. Small caps provide great opportunities, but you need to do your homework to find the high quality stocks. So, leverage our company report analysis for help with that. Next up from Barron's, Alphabet's AI spending continues to rise. What's our take on it? Alphabet managed to top revenue and EPS estimates, but YouTube's revenue disappointed investors. An interesting detail in this earnings report was the amount Google is spending on its data center infrastructure. Capital expenditure for the second quarter was 91% higher than the same quarter last year. It was, however, just 9% higher than the first quarter this year. If Alphabet's CapEx is anything to go by, AI investments continue to rise, but momentum has certainly slowed. This week with earnings season, we will see how CapEx spending is trending at four more of the AI and data center giants. Next up from the Financial Times, India is catching up with China's position in the MSCI Emerging Markets Index. What's our take on this? The MSCI Emerging Markets Index is the most closely tracked index for emerging market investors. India, with a 19.5% weighting, is on the verge of overtaking Taiwan to take the second spot, behind China, which accounts for 25% of the index. Interestingly, India is far less accessible to global investors. There are 229 China-based companies listed on US exchanges compared to just 11 companies based in India. Global investors can only access the Indian market via ETFs and mutual funds, or by navigating a lot of bureaucracy to invest directly. If more listed companies in India become accessible to foreign investors, it's plausible that India would overtake China quite quickly. As India's weighting in the index rises, it's becoming more important to emerging market investors. On the other hand, valuations are elevated while China's are much lower. Next up from S&P Global, the European Central Bank opts for wait-and-see approach on rate cuts. What's our take on this? The European Central Bank doesn't have enough data yet to make a strong conviction call on either holding rates where they are or cutting them. They don't want to cut too aggressively because that could leave inflation at uncomfortably high levels, and they don't want to cut too late given the economy has struggled in recent months and that might cause unnecessary pain. The EU's modest growth outlook and falling inflation mean rate cuts are still on the table, but again, it's not worth trying to predict where they're going because we all saw how that went in 2023. For investors in Europe, the fact that local rates might stay higher for longer means that companies with excessive leverage should be approached with caution, discount rates will likely remain higher, and fixed income instruments remain relatively appealing. And lastly, also from S&P Global, iron ore prices slide on weaker fundamentals. What's our take on this? When it says fundamentals, it really means demand from China and its steel market. Most fluctuations in the price of iron ore occur based on news out of China, given it consumes 75% of the world's seaborne iron ore. In this case, the price has slipped because of an oversupply in China, seasonally stronger export growth from iron ore producing countries, and the lack of any concrete stimulus measures from China's third plenum last week. The price of iron ore is closely tied to economic growth, but particularly in China. If you're investing in iron ore, stay up to date on China's steel market. Now, let's dive into the main piece: microchip manufacturing and the companies involved. The science of designing and manufacturing semiconductor chips and devices is probably the most complex process on Earth. The process also relies on a long list of companies, most of which are publicly listed. The companies that contribute to this process are interesting from an investor's point of view, and this is for a few reasons. Firstly, many supply the entire industry, which means there's less of a winner-takes-all factor at play. Secondly, these companies can also specialize in a specific niche and build an enduring moat. And thirdly, they are also less dependent on current end-user demand, which makes them less cyclical. Now let's talk about the process, design to packaging. The following is a simplified explanation of the process of manufacturing a microchip. This article from Electronics and You provides a more detailed explanation. First up, there's the design. Designing microchips with billions of transistors requires some of the most advanced software around. Electronic Design Automation, EDA, software is used to design the layout of chips and to simulate how they will work in the real world. Next up, there's the silicon wafers. Silicon wafers form the substrate of which an integrated circuit is created. Cylindrical ingots, known as boules, of crystalline silicon are grown using a chemical process. These boules are then sliced into wafers. Before the fabrication process begins, the wafers are polished to remove imperfections and oxidized to make the silicon conductive. The diameter of wafers ranges from 25 to 300 millimeters. Numerous integrated circuits are printed on each wafer, so there's an incentive to make larger wafers. Then comes the photolithography and etching process. Lithography is the process by which circuits are printed onto a silicon wafer. A layer of photoresist is first applied to the silicon. Next, a photomask that contains the circuit pattern is placed on top of the photoresist. The wafer is then exposed to light with a specific wavelength, which changes the properties of the photoresist where it's exposed by the mask. The pattern is then transferred to the substrate through a process of etching, chemical deposition, and ion implantation. Metal film is also applied to provide the wiring by which current reaches the circuit. The above processes are repeated multiple times to produce a three-dimensional structure, so that the resulting circuits resemble a miniature city rather than a two-dimensional map. Then comes the testing part. At this point, a wafer theoretically contains thousands of individual circuits, but many can be defective. EDS, Energy Dispersive Spectroscopy, geez, that's a mouthful, is the process used to inspect the wafer to see which chips are flawless and usable. After inspection, the wafer is cut into individual chips, each containing a circuit, and defective chips are discarded. And finally comes the packaging and assembly process. The individual circuits produced during the above process form the heart of a microchip, but there are still a few steps to produce a finished product. During the packaging process, contact pins are added and the chip is encapsulated in a protective, non-conductive material. Other components may also be added during the packaging process, or multiple integrated circuits may be combined as a single product. Now, with all that in mind, let's move on to the key companies in the semiconductor supply chain. The process described above requires inputs from numerous companies. These can be categorized as follows. Firstly, there's the foundry or fabrication companies, and they own and operate the factories, or the fabs, where chips are manufactured. Then there's the software companies, and they provide the EDA and simulation software used to design the circuits. Then the equipment manufacturers design and manufacture the machines used throughout the process. Materials companies provide the silicon wafers, gases, chemicals, and other materials used throughout the process. And lastly, OSATs, which stands for Outsourced Semiconductor Assembly and Test Companies, assemble chips on behalf of foundries and chip makers. So let's dive into the first one. Foundries. Historically, chips were manufactured by the companies that designed them. There are actually hundreds of fabs operated by dozens of companies scattered around the world. Most of these fabs produce chips that are fairly simple compared to the ones used in data centers and high-end PCs. As the process became more complex, companies chose to specialize, and the industry split into three groups. Firstly, fabless chip makers focus only on design. This includes the likes of Nvidia, AMD, and the big tech companies that are now designing their own chips. Then, IDMs design and manufacture chips. This group includes Intel, Micron, and Infineon. While these companies do manufacture their own chips, they have been increasingly outsourcing the fabrication of the most advanced chips to foundries. And lastly, foundries, and they focus on fabrication only. This list is short, with TSMC and Samsung accounting for 75% of the market, while other names like Global Foundries and UMC are in there as well. Samsung is an anomaly, as it is both an IDM and the second largest foundry company. Intel is aiming to emulate its success by rebuilding its foundry business. While there are 5 large specialized fabs, TSMC and Samsung are way ahead when it comes to the advanced process nodes, with Intel only a little way behind them. SMI, Global Foundries, and United Microelectronics tend to focus on less advanced processes. There are only 2 small independent foundry companies. Tower Semiconductor in Israel manufactures analog and mixed signal chips. X-Fab in Germany produces mixed signal chips and silicon carbide products for the auto industry. Policymakers are making large investments to increase advanced fabrication in the US and Europe. There are currently over 70 fabs being constructed or expanded in the US, with more being built in Europe and Israel. This will change the geography of this industry, but it's likely to be a long time before the list of companies changes meaningfully. Now let's talk about EDA software. Synopsys and Cadence are the 2 well-known EDA providers, but there are a few smaller companies, including Altium, based in Australia, and Zuken in Japan. Another, Mentor Graphics, was acquired by Siemens in 2017 and is now known as Siemens EDA. Ansys provides engineering simulation software to numerous industries. This software is widely used in the chip-making industry to test circuit designs before they go into production. Now let's talk about the materials side of things. The raw ingredients used to produce microchips are silicon, germanium, gallium, and other rare and not so rare materials. Dozens of chemicals and gases are also used during the process. Many of these are provided by the world's largest chemical and gas companies like Linde. Shin-Etsu Chemical in Japan is a key supplier of photoresist and photomask materials and wafer substrates. Siltronic in Germany and Elkem in Norway produce silicon wafers and other materials. Entegris Inc. is a leading supplier of chemicals used in precision manufacturing processes. Experiments with new materials suggest the use of rare earth materials could increase. This theme is closely tied to advances in battery technology. Albemarle, Wolfspeed, and MP Materials operate in this space. Note, most of the EDA software and materials companies are categorized under software and materials rather than semiconductor industries. Next up, let's talk about the equipment manufacturers. The fabrication procedure involves numerous processes, each requiring specialized and expensive machinery. This wouldn't be possible without equipment developed over decades by several companies. ASML stands out as the most valuable of the equipment makers, and at $380 million a pop, it probably sells the most expensive machines in the world. Tiny transistors require light with a tiny wavelength for the lithography process. For the most advanced process nodes, under 5 nanometers, this can only be achieved with extreme ultraviolet light, or UEV. So far, ASML is the only company that figured out how to produce EUV light, something that was once thought impossible. For an idea of what this involves, buckle up because here's a description from ASML's website. In our laser-produced plasma LPP source, molten tiny droplets of around 25 microns in diameter are ejected from a generator at 70 meters per second. As they fall, the droplets are hit first by a low-intensity laser pulse that flattens them into a pancake shape. Then, a more powerful laser pulse vaporizes the flattened droplet to create a plasma that emits EUV light. To produce enough light to manufacture microchips, this process is repeated 50,000 times every second. How's that for a feat of engineering? ASML also sells other types of lithography systems, but it has a monopoly when it comes to EUV, hence the $400 billion valuation. Just how long it maintains that monopoly remains to be seen. Applied Materials is the second largest equipment supplier but covers a wider range of production processes. It's valued at less than half of ASML, despite earning just about the same in revenue and net income. Applied Materials supplies equipment used for oxidation, deposition, etching, polishing, and inspection of wafers. The company recently pioneered a process that allows copper wire to be used for 2 nanometer process nodes. The remaining giants in the equipment space are Lam Research, KLA Corp, and Tokyo Electron. Lam Research and Tokyo Electron provide equipment used for etching and deposition. KLA Corp sells equipment used for testing and assembly. Numerous smaller companies provide the essential equipment to the industry. The table below lists the 15 largest equipment providers by market cap and the solutions they offer to foundries. Now let's wrap up with packaging, testing, and assembly and the companies involved in this process. The final stages of the process are often outsourced to specialized firms, known as OSATs, which, as we mentioned before, stands for Outsourced Semiconductor Assembly and Testing. These companies play an important role, although this role may be diminished with some of the latest manufacturing techniques. The increased production of the system on a chip, SoC, means various types of integrated circuits are created during the initial process. This happens at the foundry, leaving less to do later. Nevertheless, OSATs will continue to play a role in the production of more basic integrated circuits. The largest of these companies are ASE Technology in Taiwan, Amkor Technology in the US, and JCET Group in China. So with all that information, what's the insight? Finding value all along the semiconductor supply chain. Designing and manufacturing chips is both capital intensive and risky, meaning the leading companies have to be very big. The supply chain is one area where smaller companies can focus on a niche and still thrive. Here are a few examples of smaller companies and their market caps operating in very narrow niches in the industry. First up, UltraClean, worth $2.2 billion, sells equipment used to prevent contamination in the clean room environment in foundries. Then Ichor Holdings, worth $1.2 billion, manufactures equipment used for fluid and gas delivery during the etching process. Then Air Test Systems, worth $520 million, sells equipment used to test wafers up to 300 millimeters. And lastly, Photronics, worth $1.6 billion, manufactures photomask material. The Simply Wall Street stock screener lists 389 companies that supply equipment to the industry, so there could be a few opportunities amongst that list. To find them, you can get creative with the stock screener. As an example, the screener in the image below that we created, and there's a link in the article, looks for companies with, firstly, a market cap of 300 million to 10 billion, at least 5 analysts covering the company. Interesting companies are likely to have more coverage and forecasts will have some validity. Then, a future score of 4 out of 6 or higher. We're looking for companies that are expected to grow. And lastly, a health score of 3 out of 6 or higher. We want to avoid companies that might run out of cash. This screen ignores the value, past, and dividend scores on purpose. At this stage, we're looking for interesting companies, and we're not yet assessing their investment potential. Once you have a handful of companies, then you can start assessing their potential as investments. The semiconductor sector has had a strong run over the last year. So, it's entirely possible that you'll think the companies you come up with are overvalued, and that's totally fine. You can add them to your watch list, do your research, estimate a fair value in the form of a narrative, and wait for a better opportunity to buy beneath your estimate of fair value. There are lots of ways to get creative with the screener. You could take an entirely different approach to find overlooked opportunities by looking for companies with little or no analyst coverage and then ranking them by return on equity. But remember, companies with no analyst forecasts are obviously much smaller, and you'll have to do a bit more homework on the future growth prospects. Now, let's wrap up with the key events during next week. It's a big week for data and earnings, with the FOMC meeting and 4 big tech companies reporting second quarter results. On Tuesday, quarterly GDP data is due to be released in France and Germany. Economists expect France's economy to have grown at 0.8% in Q2, down from 1.1% in the first quarter. Germany's economy is forecast to have grown by 0.4%, compared to a 0.2% contraction during the first quarter. Germany's inflation rate is also due to be reported, and is expected to remain at 2.2%. Also, the US JOLTS job openings report is forecast to show a slight increase in job openings. On Wednesday, Australia's inflation rate will be published. Economists expect the year-on-year rate to decline to 3.7% from 4%. The Bank of Japan is expected to keep the benchmark interest rate at 0.1%. France's inflation rate is forecast to fall from 2.2 to 1.7%. The US ADP employment report is expected to show 140,000 new private sector jobs, down from 150,000. The US Fed is expected to keep the Fed funds rate at 5.5%. On Thursday, the Bank of England's MPC will meet and is expected to cut the benchmark rate by 25 basis points to reach 5%. This would be the Bank of England's first rate cut in 4 years. And on Friday, US employment data will be released. The unemployment rate is forecast to remain at 4.1%, while non-farm payrolls are expected to be up 190,000 compared to 206,000 last month. It's the biggest week of earnings season, with 4 big tech companies and leading chipmakers, energy, and pharma companies reporting. The largest companies due to report second quarter earnings include Apple, Microsoft, Amazon, Meta, Intel, AMD, Qualcomm, ARM Holdings, Lam Research, On Semiconductor, ExxonMobil, Chevron, MasterCard, S&P Global, Boeing, Procter & Gamble, Merck, Pfizer, and McDonald's. And that just about does it for this week's Market Insights. Thank you so much for listening, and until next time, invest well. Simply Wall Street analyst Richard Bowman holds positions in Lam Research, Cadence Design Systems, and Intel. Simply Wall Street have no position in any of the companies mentioned. This article is general in nature. We provide commentary based on historical data and analyst forecasts only, using an unbiased methodology, and our articles are not intended to be financial advice. It does not constitute a recommendation to buy or sell any stock, and does not take into account your objectives or your financial situation. We aim to bring you long-term focused analysis driven by fundamental data. Note that our analysis may not factor in the latest price-sensitive company announcements or qualitative material.